Hey guys, it's Jose Fuchen over here at Legacy Real Estate, Legacy Home Loans. Today I want to go over some changes, and you guys who own a house already know. Everybody who owns an FHA loan that's been able to request a forbearance, you know that you're going to be able to do it for at least 6 months, and then you can always request another forbearance for another 6 months. So what's going to happen is that you're not at the end of this, at the 12 months or the 6 months, when you do a new agreement, what's going to happen is that they're going to either give you the option of paying it off, and if you can't pay it off, they'll actually do a second loan, a second silent loan, which what it means is that you don't have to do any payments. We're not sure if it's going to have any interest in it or not, but definitely you're going to need to pay it when you decide to refinance or sell your house. Again, it can go up to 12 months. This is going to help a lot of people not foreclose. So when you guys have questions, and we get these questions all the time, what's going to happen with the housing market? Is it going to crash? So this is one of the things that FHA is doing for borrowers not to foreclose on their house. Okay. It's gonna show in their credit report that they're gonna have an agreement, and a forbearance agreement. So we don't know how is it gonna affect, but I believe this is very good because people who don't have the same income they had before because of the COVID events, they're gonna be able to stay in their house. They're not gonna foreclose, and when it comes next year, if everything's back to normal, they're gonna be able to keep the house. Same payment. They're just gonna have a second loan, which I think is fine. I think it's very good. Okay. 2. So we all know that if you're in the market to buy a house, we all know that things are changing. If you are actually in the middle of a loan, if your loan is in process, and you're actually, a loan officer has called you and they've told you, hey, you know what, things have changed. Maybe you're not going to be able to close because you don't have the new credit score required. Or maybe you are going to be able to close because your debt to income ratio is not there anymore. Or maybe you're not going to be able to close because you don't have enough money saved or reserves. So these are 3 things that the banks are looking at right now when we're buying a house. There's a minimum new credit score, and it doesn't matter if it's a conventional or a VA loan or an FHA. There's a minimum debt to income ratio, and also there's a minimum requirements. Me as a broker and Legacy Home Loans, we work with different lenders, and we know the different requirements for all those lenders. If you work with a small direct lender, or maybe a big bank like Wells Fargo, they'll have their different requirements for the same type of loan. So ask. If you got turned down, you can ask somebody else. You can ask some other loan officer, another broker. What are the requirements of the same kind of loan? Most, they're going to ask you for a 640. Some, they're going to ask you for a 620 credit score. But what's going to happen is that they're going to ask you, besides the credit score, they want to see some savings. They want to make sure that you're going to be able to do your first 3 months payments. Why? Because they don't want you to go into forbearance. You see, these FHA loans are the ones that are going to forbearance right now. They're actually the most of all the loans out there that are going to forbearance. So what's going to happen right now? Things are going to start changing. People who qualified last month, they're not going to be able to qualify as easy. So now everybody's going to start to get ready. Get a higher credit score. Save some money. Things that people weren't used to doing before, because the FHA has been very flexible. Now people are going to have to get ready months before. I mean, make sure people have to take care of your credit score. Okay? So this is what's going on. So what I'm telling you is that I know everything's going to be okay when it comes to the housing market. I feel that this forbearance option that they're giving a lot of homeowners, it's going to help the market. It's going to help the values of the houses. I don't see prices going down anytime soon. I'm thinking that only if interest rates go up, which they haven't. Right now they're still very low. If interest rates go up drastically, eventually prices will adjust, but that doesn't mean they're going to go down like in 2008. That's a totally different story. 2008 is very different from what's happening right now. Okay, so to recap, things are changing when you're buying a house. Now you have to start doing your homework. There's something called the 700 credit score club or 700 club, like I heard in the internet, and that's good. That means that if you have a 700, you're gonna get a good deal when it comes to an interest rate. If you have a 700 credit score, the bank's not gonna ask you for all those reserves. If you have a 700 credit score, you're gonna be able to do a refinance easier than if you don't have a 700 credit score. So what I'm trying to say is that now more than ever, we have to get ready. We have to be responsible. Okay? And that's it. That's it for today. So again, Jose Fuchen, Legacy Real Estate and Legacy Home Loans. Make sure you send me any questions. Okay? Thank you very much. Bye.